Today I have with me two panelists. Liming, he is from Razor Pay, and then I have with me AP, who's the managing director of Faith Pay. So when they first asked me to moderate this panel, one of the things I was curious about is it's a fintech panel. So who is going to be wait, this camera, right? All right, sorry. And so who is going to be on this panel with me? Because fintech obviously is a big thing in Singapore. Singapore is a well-known financial hub. And when they told me it's Faith Pay and Razor, I was not so surprised, but at the same time, you could be a little bit surprised because when you think about it, when I think about Faith and Razor, I don't exactly think about finance immediately, right? I think about great deals. I think about gaming products, obviously. So for the benefit of our audience today, I'm just going to ask you guys to share how did you guys end up in finance, if I may ask.
Sure.
AP, why don't you share what's Faith Pay doing here?
Yeah, sounds good, right? If you ask me maybe like a few years ago, I also be surprised that I'm actually here talking about fintech, right? So yeah, the surprise is mutual.
Okay.
So I think what's really interesting is that maybe how we caught about in this space is a combination of two kind of separate things that's happened in the market, right? So the first thing was maybe about 4 years ago. Faith actually acquired Groupon's Southeast Asia assets, right? So after we acquiring the assets, Joe, who's the main founder of the company, and I started talking to the merchants that were on our platform. They were sizable in the tens of thousands, right? So we kind of talked to them and kind of understand what they want, what they like about the Groupon business, what they didn't like about deals, etc. So one of the things that we found out was that the merchants actually wanted loyalty, customer loyalty, right? So that's one. And then on a separate track, some of us went to China, right, about 4 years ago, and then came back and realized that this cashless payment, mobile payments is a huge thing. So everyone's going cashless there. If you use cash, they look at you, it's kind of like, don't know what to do, right? And then kids, when they role play, they actually use their phones, and then they kind of, I pay you, I scan you, and scam me. That's what's happening, right? They don't use cash like what we do here. So this come out of this combination of two kind of separate events, and then we started to link both of them together. And how do we link it? It's because when you talk about loyalty, right? Back then, a few years ago, when there was no Faith Pay, there's a lot of so-called you scan your receipt, right? And then you show proof. Then after that, they'll give you points or chops, right?
Yeah,
or whatever, right? Free car park, etc. That's kind of still happening now. So you need that physical part because a lot of loyalty programs out there were separate from payments. So you have to, in order to make sure that you made the payment and how much you paid, so that they can calculate a percentage in terms of points, right, or cashback. You actually need to prove lah. So the last mile to make that really digital was really payments, right?
Okay.
If we can track the payment, how much then we can give back, rewards to the customer lah. So that's one, right? And then so we pieced this two together, and then we had a mutated hybrid solution, which is Faith Pay, which is payments plus cashback, and was really just to address our merchants' needs, right? And kind of looking at what's trending ahead. And luckily, China's were ahead of us like a few years. So that's how we pieced together and came into this space.
So basically, the deals needed to be paid for, and that leads to the solution, which is Faith Pay today.
Exactly.
Okay.
Exactly. Correct. And then the merchants wanted deals, not just deals, but also customer loyalty.
Yeah.
Exactly.
Okay. Liming, I'm not a gamer, but I know Razor is a gaming company. So same question, what are you doing here?
Sure. I think it's quite similar to AP. Interesting because you just talked about you did evolve into Faith Pay because of what you realized your merchants wanted, right?
Yeah,
so if you put back to your question, why did we get here? Because we always create new things with the gamers right at the center. That's always been our ethos, right? For gamers, by gamers. We started with a mouse company. We said people want a good sound when they play games. We created headsets, keyboards, laptops, and all that. So a few years ago, before I even joined the company, I was actually a banker. I was helping my CEO think about what's next, right? Because he was a very, very hardware focused. He had started building the software. I said, where's your next path? We're going IPO. We're going to talk about it because people will ask about it. So at that point in time, he was talking about building this whole entire ecosystem around the gamer. We already had the hardware side. We had the software side. Our users were coming in. And then the last part is where people always say, how do you kind of monetize or I guess provide services to your users to kind of close that loop. So he actually said, look, I've been doing it for a while. It's just that we've not been talking about it. And I said, what is that, right, at that point in time? So when you think about the way gaming has always kind of led the tech side of things, adoption of AR, VR, your motion sensing, usually it kind of starts with gaming. So when you think about digital payments, gamers were doing digital payments for a long time, right? In the PC world, buying virtual helmets, virtual skins, getting fiat into the digital world. But then as you start seeing mobile gaming start to be picking up, gaming became a very global thing. But the problem is also when the game companies move to mobile, move to freemium models, you need to find a way to get cash into the system.
Yes.
So in the US, most people have bank accounts, they have PayPal accounts, they have credit cards. So that was okay.
Yeah.
But then we saw the growth of mobile gaming and all that in Southeast Asia, and you realize that there were a lot of users, but no one was actually making transactions because not because they don't want to, they don't have an avenue to. So we started building a network of offline channels like 7-Eleven and Indomart and all that in Indonesia, where kids can go up to the counter, hand cash over the counter, get a digital PIN, go home, enter the PIN and top up.
Okay.
So that kind of started our journey of kind of offline to online. And then as we also saw that, hey, actually, the spending power of some of these young gamers who were with us 15 years ago are now in their 20s and 30s. Maybe they have a little bit more spending power. They have credit cards. Maybe we should also build the credit card processing side, the debit card processing side. So we created a gateway business, right? So that was quite a few years ago. And then after a while, we also realized that people were coming to us in the sense that because we built these offline channels, that is very hard to build up. Whether it's e-wallets coming to us, it is telco guys saying, I want to sell my digital telco pins. Can I ride on your system that's already plugged in the offline? We say, sure. You make money on top. And then we looked at our numbers and we say, our gaming side has only become like 5% of that business. So that's why we say, hey, actually this business is really on the path. Let's strip that out and create this fintech business. But that's a very B2B side of the business. You don't really see us. You go check out Lazada today in Malaysia, not in Singapore. Like let's say Malaysia today is 12.12. If you're buying your stuff, you go to the payments checkout page, you actually see Razer at the bottom, right? But it's at the bottom. It's not a consumer-facing thing. But Razer is still a consumer brand. So we decided to do a trial, right? We said, if we take the Razer brand and create the e-wallet, can we see whether the youngsters will come in and actually transact using a wallet? Because they are the ones who are, I would say, more adventurous, try new things, right? Put a few dollars in there, try it. They can buy their digital pins on the game instead of walking to 7-Eleven, right? Sometimes weather hot, they say, forget it, I'll just buy it on my phone. And we started saying, hey, we saw this quick pickup. So for the last year, we started saying, what's next, right? Youngsters don't have access to good financial services, even at the very basic, a card, right? A debit card and all that, which is why we launched the card.
Yeah.
And if you look at the business, our business has now grown to a stage where we are processing, billions of dollars.
Okay.
Last year, we processed about $2.1 billion just in fintech, non-gaming payments and all that. This year, we hit 1.8 in 6 months. So I think we've come a long way. This is something that we plan to continue to grow. But again, who are we looking at from the fintech side is probably an extension of just the gamers, but gamers at start, but more the youth, the millennials, and what can we do to facilitate this next journey for them?
I think it's a good point you raised, because I still remember when I was young, you guys know, if you are not 18 or 21, you can't even get a card, you can't even pay for anything cashlessly, right? Because that's the banks require that minimum age. So I think, it's a very good point that you mentioned, serving, maybe the underserved or people who do not have access to financial markets or financial services yet, maybe not just because they are in an underdeveloped country, or maybe just because they're not old enough even. I think the big news over the past week, and everyone here knows, is obviously the digital bank license, right? And I know Razer was one of the applicants, at least for it. I think what's interesting to me was to note that the full digital bank license were actually won by two companies that were not banks. They were Grab, Singtel, and then you got the C Group, of course, which is known for Shopee. Are you guys surprised that traditionally, nowadays when you talk about fintech, who's meaning digital bank license, no longer you're talking about the banks, you're talking about consumer brands actually. I mean, you are the expert here.
Well, it's not a surprise because if you actually followed the way MAS set out the framework last year when they announced it was clear. It can only be applied by tech companies, right? So the tech company needs it. The tech company needs to show that they have the I guess the know-how, the I would say user base, and again very clearly stated that it's meant to serve the underserved.
Yeah.
Or unbanked, but Singapore has no unbanked, right? So underserved markets. We took an approach that we felt that again Singapore, there's so many banks out there. Everyone's, I mean, if they literally want to crush any new entrant, they will crush you, right? If you are going after their customers in your growing years. So we were very hyper focused. We basically said we're building a bank for the youth,
Okay.
right? The really underserved guys. We talked about even within the youth, there are people like you working or just in college, really thinking, hey, I want to go create my own startup. I can get my first seed round from father, mother, uncle, but the next, dollars I need to go, if I go to a VC, I have to do all these panels and all that, and maybe not get money. I go to a bank, I need to give my son, my daughter, my house, my car, and still not be able to do it. So we were always thinking, what are the challenges that this core group, which knows our brand very well, because at the end of the day, building something on paper is easy. The biggest problem for startups is, can you build a brand that you can trust in financial services? How do you acquire customers? Then obviously, how do you retain? Well, the good thing for us is we have, number one, sorted out. Number two, sorted out. In the sense that, Razor's fans, I launched 1,337 beta slots in Singapore. And literally in 5 days, I have 50,000 people waiting. That's where we came from. And again, it's not just about Singapore. We're proud to have had the chance to at least apply, and if we had gotten, we'll launch it in Singapore. But ultimately, this thesis or this digital bank was never about Singapore, to be honest. Because if your business case is just Singapore, I don't know how anybody can serve the $1.5 billion paid up capital in 5 years and be profitable. It's pretty much impossible. So you need to also be backed by a company that has regional or global views or presence, right? We are global. We think that if we had created what we have created here in Singapore, it would have also allowed us to go not just regional, but global very fast. Because I have over 1 million users on the Razor platform outside of Southeast Asia, actually. That's where my ocean is.
That's the big market.
So I guess your question, and I've had shareholders, friends, like I'm a straight shooter, so I know people ask, are you disappointed? Of course disappointed, because we put in a lot of sweat, tears, distraction from the business over the last, I would say 2 years since we first heard that this was coming up. But is it going to detract us from? No, because at the end of the day, again, you asked me to say this, can I do a lot more with the $1.5 billion that I would have otherwise needed to put in here? I can do a lot more because, today I'm not shackled down by this. I can literally think about going out there in the US, in Europe, because Razor's already there.
Okay.
Southeast Asia is a very challenging market, by the way. When you think about financial services, AP should know, right? Trying to grow one country is tough enough. Trying to grow across different parts of Southeast Asia with different kind of regulations, they're all trying to change, but it's still different parts of the progress. And if you got locked down just in Southeast Asia, it may hold you back. We are blessed in the sense, I'm not saying that we have this ambition. We're blessed to be backed by Razor, which again has already built out that user base and presence globally. So it's a question of hopefully in 2021, how I can come back here maybe one day and you guys can say, you guys just launched a country we never expected it.
I think one thing you said is, which is true, is that it's very important to have a global view on things, right? When you talk about fintech, we shouldn't just be restricted to our ideas of what we can do in Singapore, but we need to think beyond Singapore at the same time. I just want to ask, AP, it feels like, if I can say, all routes lead to finance, because when I look at the biggest company in the world today, Google, Apple, they're all trying to get into finance, right? So when we talk about startup expansion, I mean, Faith is obviously, a regional player, and you guys are getting into finance. Is that statement true? Do you feel like, all road eventually leads to finance when it comes to startup? So it doesn't matter whether you're a startup, a fintech startup, or a startup, you just end up in finance somehow?
I think the answer is all roads lead to the customer segment you're really serving for, right? And if that leads to finance, so be it, right? If it doesn't, it's fine, right? So let me, if you kind of, maybe I'll just give everyone like maybe a brief history lesson about, let's say, for example, Ant Financials, right? How they actually went into finance in the first place, right? So it started off actually very similar to like what Li Meng says for Razer and for Faith as well. So they started going into payments, having Alipay in 2004, right? When they realized they needed that payment to support Taobao customers, right? So that's how they started, right? To actually create a solution to service their customers, right? To build that trust, right? They realized that transaction volume wasn't really high, trust was an issue, right?
Actually, maybe if I interject as well, because if you were in China then, even getting a bank account was very difficult.
Okay,
yeah, that's right.
Getting a card was almost impossible.
Okay.
You need your 账号, you need all that stuff, and depending which province. So they saw a segment that they could actually create, given what the scale of Taobao, and they moved in it. Sorry.
Yeah, absolutely.
So,
right?
so basically, e-commerce moved quicker in a way than
and
the
rather the Alibaba, right?
Yeah.
And really was fast to really understand the problem, but to help them build their business, right? Then actually fast forward 10 years later in 2013 or so, that's when they actually have this service called Yu Bao, right? So Yu is 多余, the excess, right? bao is kind of like, if you will, investment and then kind of growth, right? So it's really about that, right? So that's how they actually started Ant Financials, right? And the whole logic was to actually serve the really niche market, like what we're talking about, right? The underserved, right? Underbanked, right? And actually the vision was to create, enable people to even invest 1 yuan. 1 yuan, basically it's just like 20, 30 cents Sing dollars, right? So that's how it started, really, really micro type of investments. And then they allow the greater population, which is huge, the unbanked population or underserved population, to get money, returns of 3.54%, right? And down to a really, really the micro number. That's when they can really go massively, right? And that's how they really started growing Ant Financial, right? So I think all road really, if whatever leads to, it's really just about serving your customers that you choose, right? And for example, for Faith, we choose customers like yourself. I hope you use Faith Pay, right? And then buy deals on Faith 12 today. Lots of good deals. Sorry, I have to sell. I love the deals that we have, right? Makan and stuff. So I think that's one, customers. But at the same time, for Faith, we really service our merchants, right? Really, I was mentioning our history, right? And you service the merchants well, and then if you have the guts enough to really build products and services to service them, an ability to evolve, right, and work fast, right? We're internally in favor of this concept called #fast fish, right? It doesn't matter how big you are, but you've got to be really nimble, right? You need to feel the market well, execute really well, and service your whatever target segment, your customers, really well. When you do that, that's when all roads leads to whatever needs it to be lead to lah. So whatever is it, finance or not, right? So I think that's fundamentally what I believe.
Okay.
Yeah.
I think AP got a good point, right? So as a business, you focus on your customers, the people that you are targeting. I think in a traditional way, it feels like the banks, they would obviously focus on the customer as well, but it felt like they were providing a banking services. Whereas with you guys, you guys are focusing on your customers and thinking, what do I need to build so that my customer can complete a transaction?
Yeah. And I think it's about helping whatever your merchant focus on create value, or solve their problems, right? I think that's how it is. And we're actually really surprised, right? When we started launching Faith Pay like 3.5 years ago, right now we have close to 40,000 acceptance locations in Singapore, Malaysia, and Indonesia. 3 years ago, asked me, it's like, no way, Let's say, whatever boss asked me, it was like crazy, right? And I think that's great because then it's all about market fit, market acceptance, right? So when you know you got a good product, it just grows, right? So I think it's I think that's how any business should be.
I mean,
about.
Our topic today is, will bank go extinct, the traditional bank? I think the answer is no. I hope the answer is no, and I believe most people will think the answer is no, right? But can I just challenge it? Could the answer be yes? Could a traditional bank actually see its? I am talking about a traditional bank, right? Actually see its services being overtaken by companies that are providing great products, great services to their customers, and also providing that financial fulfillment capability. Is it possible, or do you see as the need for traditional bank to actually expand? Maybe they go into spaces that you guys are looking, they look at what your customer need and they try to solve it for themselves.
Yep. Maybe I'll take that first.
Go ahead.
Then Limit can add on his perspective, right? So I think if you take a look at answer that question, answer is no. But I think it could be that certain banks may go extinct, if you will, if they do not react fast enough, right? If they rest on the laurels, if they don't digitalize further, if they don't push boundaries, if they don't look at certain segments that otherwise they won't look into, right? So I think the answer is yes, if all that happens, right? But I think most banks are pretty smart and nimble. Some a little bit faster, some a little bit slower, right? I mean, for Faith, we had a great opportunity to work with DBS, right? Because DBS bankers, you using a PayLah, you actually can scan Faith Pay, and it kind of affect the transaction too, right? Then also Singtel Dash. So I think DBS is fantastic. When we approached them, about 2 years ago with this idea, 1.5 years ago, they saw it, right? So they were visionaries, right? And I was totally surprised that they took it immediately. They see what we're trying to do, and they see the value of cooperating. And actually, to be honest, when going to the meeting, Joe and I went for the meeting with them, and we were a little bit afraid, like what Liming said, right? They can just snap you out, So we were a little bit concerned, but they were visionary. They saw this open system that we're working at. They were collaborative, and they see the value. I mean, thankfully, also we've created the value for the banks to kind of say, want to talk to us, right? And say, hey, it makes sense, right? So I think if the banks are nimble and they're open-minded to cooperate, maybe in certain places co-opetition, right? Then I think they'll be totally okay. Yeah, and I think going forward, it's really about this ecosystem, right? Building ecosystem where certain places you compete, certain places you cooperate, and everyone serve their own niche and know what value they're bringing to the table, to the ecosystem, and to its constituents that we all collectively serve. Then I think it's okay. Yeah. So that's how it is. Yeah.
Collaborate. Is that what Razor look at it as well?
Of course. I think I've never made this point that we're out to kill the banks. I think some startups may have that view, right? Again, I've been in banking for a long time, both inside a bank and obviously now trying to create the kind of neo-bank, right? Number one, I probably will frame it this way. You'll probably see the traditional banking models extinct.
Okay.
Not the traditional banks, right? As in the brands and all that. They've been here for a long time. They are trusted not just by their customers, but don't forget, you can't operate a real bank without the trust from the regulators as well. The regulators will never let you go do free for all and all that, because at the end of the day, any disruption to a bank and creates a run, it creates a very big problem for a country and its economy, right? So I think it will probably go this way where fintech are challenging it with the new kind of platforms and experiences. These guys, as AP says, they need to figure out how do they strip themselves away from their traditional things, branches, your paperwork, your onboarding, your customer service support and all that, because they spend a lot of money and effort to build that up. There has always been kind of a hesitation, should I, put things in the cloud? No, I got all these on-prem servers in Singapore and Malaysia and Thailand. Should I do that? The old school guys will say no, the new school guys will say yes. So they got to sort it out. They'll probably feel the pressure in the next few years, but like I said, if they move fast enough, they have the capabilities to do that. For the newcomers, they need to move fast, move quick, get the customers in, right? Because at some point in time, it's going to come head to head. Right now, I think it's still quite far away. I mean, when you talk about the small little local banks, you probably will see them struggle.
Yeah.
Okay, maybe I take that back. You probably see some small ones disappear, but if the small ones are fast enough, they actually can become much bigger,
yeah.
right? Because they don't have the legacy.
Yeah.
The big ones are the ones that will have issues, but if you look at all your global banks, your Citi, your JP Morgans, even the big ones in the area, DBS, UOB, they're all creating new business models. So I don't think it's going to disappear. These guys won't disappear, but the traditional way of doing things will disappear.
Yeah, I guess it's a matter of fact that, sorry.
You go ahead. Yeah.
I guess it's a matter of fact that your traditional banking model, like your bank branches, I would see even the personal bankers is being stationed there trying to sell investment products. I think that's going to be very difficult to sustain in the future.
Yeah, and I think the startups, like the fintechs, new digital banks, right, or whatever the disruptors, coming in, have a huge advantage, right? And that huge advantage is that unencumbered mindset, right, which you kind of mentioned too, right? So for example, right now, if you're, say for example, you got a digital bank license, right? If you think about how you're going to get deposits, how you're going to, service your customer without a physical location. Now, if you can do it well, then of course your cost, right, is low compared to whatever banks out there. We have got real hardware and rental costs, right, electricity, etc., right? So if they are good, they can really leapfrog, right? Yeah. So I think that's where the advantages of the disruptors or the new ones coming in, right, into the market. So then, if you're a traditional bank, but many of them these days, like because I bank with DBS, you're pretty much digital, right? I don't really write check anymore. I don't visit a outlet, right? Maybe the ATM machine once in a while, but there is actually quite digital, right? So I think then the challenge for the incumbents, all right, and the banks would be then how do you have that mindset, right? And be unencumbered, but it's not easy, right? Because there's a lot of legacy. But if they can, then I think they can really do really well and outdo whatever new entrants there is in the market, right? If not, then I think if they have a good mindset to cooperate, then I think it could be fantastic.
Okay.
Right, in the future.
I think to add on to that, if you actually think about a lot of these fintech guys and things models have been evolved over time, right? So for us, why do you even think about this? Again, you serve the underserved. If your go-to market is I want to be the bank for everyone, I would say good luck to you, because number one, trying to serve everybody from teenage years to the 70, 80-year folks who already have been banked by the existing bank, pretty well banked, and probably have few bank accounts.
Yep.
How are you going to convert them?
Yeah.
Just by UI UX? I don't think so, right? Freebies, that's probably the easiest, but it's not sustainable, right? So we went into this basically saying that, at least from our perspective, just serve the part that you think you're good at, right? And for us, it's the gamers, the young, and all that. I think the challenge for a lot of the fintech is I want to serve all. Number one, you don't have the resources to figure out something to serve the entire kind of demographic across, because everyone has a different nuances. I like to focus on young because they are the future consumers. They may not have the I would say dollars to spend big, but if I'm there from young 20, 30 years ago, later they'll be big customers of ours. You just kind of grow with them. And back to AB's point is just make sure your customers' needs are right at the center, right? So the banks need to figure out, the new old banks need to figure out what are you really trying to do, right? I mean, if even MES came out in the framework, as I mentioned last year, which I spent a lot of time looking at every single line. I can pretty much memorize, right? The final thing that most people didn't realize, if you didn't follow it, is that there cannot be predatory pricing for you to do your business. Now, that is a very big challenge for people who don't know how to get customers cheap and how to have a product that is sustainable. Because, if everyone's just is depending on, let's just, this is what the bank is offering, I'll just go and, give bigger, no backing to it, it's just dollars burning it, you will get slammed by the regulator.
So predatory meaning like you just undercutting.
You just undercut, deposit rates attract customers, which I think they are afraid that tech companies do that. I'll just go and fundraise a lot of money and I'll just keep burning it.
To acquire customers.
To acquire customers and also to make sure that you retain, you will also burn, right? Yeah. Then where is the light at the end of the tunnel? Because they also don't want the person to come here and 5 years later say, I'll give you the license back because I've not been able to fundraise, I've not been able to do anything. and I'm loss making
Yeah.
for the last 5 years. So I think we gotta be fundamentally be going back to I think what I said is financial is interesting. There's a lot of growth, but you cannot operate without making sure you know how to operate within it is a regulated business. You can't launch a financial product without a license. It's not your gung-ho tech guys that go ahead. And the final point is, actually before I actually applied for a license, I went to all the senior management of all the local banks. I said, guys, if I apply, right, please don't see me as a threat. I'm not here to fight against you. I'm helping you grow the pie. We're here to disrupt from an experience, from a whatever perspective. I'm not here to kill you or get
replace.
Because I think that's where incumbents are always afraid. I mean, you've seen that happen in ride hailing. You've seen that in traditional retail. You've seen that where tech companies come in, bam, incumbents die away. I say, hey, I'm very friendly. I'm not here. I'm here to grow a pie. The young ones, you are trying but not getting there anyways. Maybe at some point in time, if you are really collaborating, they go from 17 to 25 and 30, right? And then they need their first $1 million to buy their Ferrari or whatever. Please go to the big guys.
So you're not giving the loan to buy the Ferrari or the car.
No. What I'm saying is, if you need it, there are guys who've been around that has the balance sheet and all that to do it. I just focus on this. So it really depends how you look at things. Jumping into this fintech, it's a nice, sexy word, but it is not easy to navigate. Different countries, different regulations. It's not one size fits all.
That's true. Yeah, I think it's a good point. I mean, we need to not forget, banks provide us with a lot of necessary services like your loans, buying a car, insurance and products like that.
Yeah.
I just want to ask, since it seems like consumer-facing brands can, compete in a fintech arena. Do you guys see it? Can banks do the opposite? No, can they claim that since we got a customer, can we start building computers, keyboards? Will they start to think that way? Since you are
again, maybe I spent a lot of time watching everything that comes out from MES in the last week. If you had seen the announcement I believe it's last Wednesday. And the history of the way banking systems evolved in Singapore. About 20, 30 years ago, I can't remember clearly exactly when, but the regulators came to the banks and say, look, family banks or government banks, you are now very convoluted. You have financial, you have property, you have all these, right? Back in the days, you had DBS owning DBS land. And so they said, get rid of all your non-core, non-financial. You need to operate only in the financial services. So that's why you saw, DBS. By the way, a lot of people didn't know DBS then was part of today's Capital Land. It actually was one. The younger guys probably don't know. I'm a bit gray hair. I know, right?
Okay.
So that's been the way it's been in Singapore for the banks for a long time. So last week there's been a consultation paper for a long time that came out and said that post the consultation paper, the MAS and all that are now kind of looking at revising the regulations where banks who are regulated can potentially go into non-financial marketplaces.
Okay.
Right. So none of them have actually, I would say, officially kind of done that, but I would say that consultation paper obviously has inputs from the existing banks, probably inputs from the existing players who say no, cannot, because later this guy can't kill me. But I think it was interesting that it came out on Wednesday, because that shows that MES is also opening up their minds. But obviously, read the entire press release. I'm just summarizing it very quick. There's a whole list of conditions around using the brand and blah 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 that we'll spend time here. But I think to answer your question, it is looking that there are a little bit of flexibility. It's quid pro quo in a way. If these can come in, these guys can go there. That's my sense.
Okay, so that's interesting, possibly. AP, I don't want to put you on the spot, but I just want to ask, with banks, credit cards, they give a lot of deals as well, and a lot of people are attracted to the deals, right? So I know HSBC, they have like entertainment apps and stuff like that. It feels like the banks are also, somewhat involved in the space of giving people good deals. So do you foresee, how you guys can collaborate with them, or, could they potentially try to compete also actually?
Yeah, so great question, right? I think one thing for sure is that the next few years is going to be extremely exciting for consumers in Singapore, right? With this banks coming in there, so on and so forth. You'll see maybe consumer-facing companies going into some sort of a fintech space.
Okay.
Likewise, you see maybe the traditional banks, right, or related enterprises to go into more consumer type, right? You definitely see it. I think you mentioned a point about, I think there are signs towards that, right? I think the reality is that it's not easy, right? And key thing is about brand association, right? So I think Razer can come up with cool products and then people will buy. Yeah. But let's say for example, you select any banks, right? On the top, I think maybe you might not, because the bank's brand is just represents something else, right? Maybe it's about trust, stability, right? So likewise, if a certain bank wants to create certain deals, right? And we know it for a fact, right? Many of them actually want to collaborate with us, right? Okay. So banks actually talking to us how we can collaborate, because they realize it's really hard to build up that stickiness and to have it associated with buying a deal, right? But Faith, they can, right? It's whatever, maybe the way we're set up, the amount of supply that we have, we've got tens of thousands. Banks not going to create tens of thousands, and then to create a business, to me, maybe like $250 million. To bank, that's peanuts, right? So will they focus on it to grow that $250 million to maybe X hundred of million? I don't think so. So I think that's where I think going forward, there's going to be a lot more collaboration where everyone, if you focus on their strength, and I'm focusing day in, day out, I'm living in deals and payments and cashback, the banks aren't. I have a team, right, that really just looks into it and understand our consumers. We've got data. We understand exactly how to retarget a customer, what they want. We know our customers' preferences really, really well. We track our data every hour, every other hour. So we know what the trends are shifting. And then we're able to kind of meet the supply and demand really rapidly, right? So because of that, we totally always outsell, right? Any other, whether is it, whatever credit card stuff, and we work with credit cards as well, right? To provide our deals to them, or even when you sign up with banks, we work with certain banks. If you sign up a credit card, they realize that giving Faith points, right, our rewards dollars, it helps them get more signups because they don't want a luggage anymore or whatever deals they want, right? Yeah, correct. Yeah, so they actually go to us, and maybe because the target market, because it's slightly younger.
How many
Samsung you can do one, right? Exactly. But with that Faith credits, you can buy staycation, you can makan, hair, salon, massage, etc. Right? So therefore, they realize that, hey, I think we can do it a little bit better than them, right? And I think I see that happening. So a lot more collaboration going forward, right? And I think if you take a look at maybe what DBS is doing, I think it's probably a good example of what it might come. You open up DBS Bailout app, and you'll see they work with Chope, they work with Faith, they work with Golden Village, right? They work with like Gojek for ride hailing. I think that's going to be the way, right? Okay. They could, but then I don't think they will not do as well as the ones that are focused. And we've been doing it maybe 4 or 5 years ahead of them. It's not even 10 years, right? So I think that's going to be the way going forward. So exciting times.
I think it's a journey. I mean, that's my point. As some will evolve quicker than the rest. It's a journey because it's human nature, right? Imagine if one day you go to another bank, not DBS, and say, look at what some other bank is doing. Can you replicate? Usually when you go to the person in charge, whose job is to digitize the company, they'll say, don't worry, boss, I can do it. Give me the money, give me the time, I'll build it myself. Because if you say everything is kind of connecting to someone else, how do you just do it? So I've seen a lot of that where the incumbents or the traditional guys will always have someone who comes in and do it. They do it for like a couple of years. The guy leaves, they hire someone else. They look at it and say, no, you just wasted 2 years. Let me try it again. So I would say that, you will probably see that journey happen in different. The guys who get it right is realizing that just do what you're very good at. What you're not good at, don't go and do it. Just partner with people. I mean, like for us, we can go into financial services and hire a bunch of actuaries and all that to create insurance. I said, no. I told my guys, no. Let's work with FWT. They know what they're doing. They've done the whole digital insurance onboarding. Bam, come on, we'll do it with them. Wealth management, Franklin Templeton, you know that you're a traditional brand. You probably don't want to evolve your brand into a youth and people still wouldn't buy it. You are the fund factory. You know how to create the funds. You create funds day in, day out. Just figure out how to work with us to do something that our customers want. And we bring the customers to you. You bring the product to us. And we grow as a platform. So it's whether you are always, thinking they can do it in-house. There are some people, obviously, who have probably the luxury of building a lot of cash and funding came easy back in the days. Then the startup guys also say, no, we'll go hire the guys who build. I just think that the market is changing and evolving so fast that if you really want to stay on the game, try not to do everything by yourself.
Yeah.
You get very distracted.
Yeah.
In a time like COVID where I think fundraising is very tough, you never know when you can fundraise the next thing. Take the money, focus on what your core, value prop, and just build it. Because at some point in time, you become like Faith, where someone will say, I'll come to you because I don't want to create it.
Okay.
Whereas if you're a jack of all trades, but you're kind of neither here nor there, 20% here, 30% there.
So you really
right on.
The whole collaboration, the whole idea of collaboration, especially once you have your own fixed core value, your own fixed customers, it's quite an important part, especially if you want to expand quickly, go into fintech. I don't know if anyone has any questions, but if you guys got questions, you all can feel free to ask, and we'll try to address it if we have time. I guess one thing that I do have in mind is that it always, it's a question I always have, which is basically, because I talk to a lot of fintech founders as well, and these guys have it hard in the sense that, whenever they want to launch a product, you got to go through the MAS license, got to go through regulations, and a lot of times these things take some time, and for them, it's also very costly to acquire customers, as you can imagine, because, it's finance, the cost of acquisition is not cheap in those kind of products, whether it's like fintech robo-advisors, for example, right? Whereas for you guys, it feels like coming from outside of finance, it's a lot cheaper, a lot easier to actually acquire your customer, especially if you have a solid value proposition to consumers. Would you say, to some of this, potentially enterprising entrepreneurs out there watching this, that it could, even if they want to start a fintech company or they want to look into fintech, is it actually a better idea to go somewhere indirectly, like maybe I would say Grab, Uber, where they started, with ride-hailing services? Is it actually easier or not really?
I would say, go back to my same thing, right? It doesn't matter whether you're fintech. It doesn't matter whether you're a consumer product. It doesn't matter what you do. If you don't have a focus, right? And tomorrow someone says, hey, fintech, sexy word, maybe can fundraise, and you go to fintech, blah, 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 right? I think that whole thing will just fall apart very, very quickly. In the good old days when, as I good old days pre-COVID, there's a lot of hype, a lot of dollars, a lot of easy to fundraise, fine, right? You kind of put together a very nice pitch deck, you know how to sell the dream, you get money, you go to the dream. But in these current times, I go back to the fundamentals. What problem are you solving? Is that a problem that you yourself as a customer, if you were a customer, that your product actually solves that.
Okay.
Right? So it doesn't matter whether it's ride-hailing, it doesn't matter whether it's e-commerce, it doesn't matter whether it's gaming. I mean, look at Secret Lab. I mean, this young bunch of guys, they came out with their gaming chat today, they're doing well, right?
Yeah.
I mean, great that one of them were actually an intern at Razer. So, maybe they came in and say, hey, Razer,
your chair not.
No, we don't have.
Oh, yeah.
So we only just launched our chair this year,
okay.
right? But maybe he saw like, if Razer doesn't do it, I'm a gamer. I think I need a gaming chair. He left and built this up over the last few years, right? So it is, at the end of the day, what problem are you solving for? Is it a problem that is not just living a dream and ultimately, right? Unless you're a social enterprise, you need to understand building a business. You need to get it to commercialization fast. You know what the target market is, and getting there. Not spend time, and we spoke about this before we came in. Don't get distracted with going and building your personal profile. I see a lot of problems, a lot of entrepreneurs, they spend a lot of time building a personal profile than the business. Because I always get concerned as an investor, right? I mean, I looked after the investment arm for Razer as well. The problem is when I see someone who talks a nice talk but spends so much time doing these kind of things, then you go, who's building the business? That is where I think goes back to the fundamentals. Fix one problem, solve it. Always make sure that you obviously have plan B, plan C as a backup plan if you pivot, but spend 90%, 80% growing that. Get it right. I mean, they spend time getting your kind of Groupon faith thing right before you even move to pay, right?
Okay.
And I think just to add also, absolutely resonate with that. I don't think it's about outside in, inside out. It's really just about focusing on the segment that you want to serve, right? So just focus on that. And in fact, I think maybe a sub-segment is always good.
Okay.
A niche, right? The deeper you can go or smaller, the numbers may not be that big, but then I think that's a space then if it's underserved and there's an opportunity going forward. And then sometimes also thinking about growing with your customer, right? Whether is it, in terms of like time or other needs, right? Then you do fine. Whether you're outside, I think you'll be totally, totally cool. And then once you have that, you become a Lego piece that maybe 5 years later, 3 years later, 3 weeks later, 10 years later, another player might need this piece that fits this puzzle, right?
Yeah.
So I think just work on your Lego piece, build that value, just know it really well, and the rest will just fall in place, right?
Good point. Yeah. I mean, we don't have much time, but I see some questions, so I'm just going to ask, and one of you can just answer. Someone asked a good question, should I intern in a finance company before starting a fintech? I would assume yes, but, anyone beg to differ? Is it necessary?
I think
intern somewhere?
I don't know. So I think I see a shift actually on this, right? Because we employ a lot of interns, right? So I always ask the question, why you choose Faith? Because it's just like, obviously, they've got banking students working for Faith, right? And I think that's a very interesting question, also in a broader perspective. When you talk about innovation, how to compete well, talent is always key. We're starting to see a little shift, at least from how I see it, where a lot of good talents are also looking at startups, right? And traditional tech companies as a first source of entry, right? And then, the incumbents, right? The traditional banks, etc., maybe as a later. It was like 4 or 5 years ago was a different case. All the talent were going to banks, right? Yeah. It's almost like unfair advantage, right? Yeah. So now it's shifting a little bit, whether it's the traditional tech or fintechs, right? So I sense that I think that's happening. I think it's really what you want to learn, right? There are great things you can learn from both sides and see what you want to learn, right? I mean, if you're a startup, it's probably very fresh, very fast, and where the environment where things are always changing, pivoting, there's a lot of momentum, right? Whereas, let's say traditional bank, it's probably about processes, regulation, you understand how that works and how you do a matrix organization into add value, et cetera, et cetera. I think really different, but I see a slight shift in the trend.
Okay. Yeah. I guess another question maybe for Li-Meng is, what type of innovation do you see in the space, especially now that, COVID-19 is a huge thing. I think a lot of things are changing. I know contactless payment went up a lot, especially during the whole circuit breaker period. Any other trends you're seeing?
Well, I think that whole consumer behavior has definitely changed a lot in the last few months of COVID. I think it's just going to accelerate even more. You will then start to see, new ideas come out. I think, whether it's it's evolution of things like your robo advisories, your stuff. But I think people are now also, because of things like that, able to also think outside the box, outside of just one country. In the past, if I want to grow, in regional markets, I have to get on a plane, go there, meet, and that progress is slow because when you come back, the next meeting is 2 months later and you kind of talk about the same thing. So I think the not really innovation, but you see the growth of some of these platforms probably grow a lot faster because of the amount of opportunity you can do through the virtual.
So almost like regional, you can
regional, even global.
Events, global.
Yeah.
Okay. Another good question. I think I think this is a good one. If for people who do not have a background in finance, is it possible to get into the industry, or what's the best way for them to get an industry into the fintech space? I imagine you guys are also looking for tech people as well. That's
so maybe fintech, right? Is fintech, but when you look at fintech, there is a broad thing that actually makes a fintech work. Yeah. It's not just, I always say, you can get a PowerPoint monkey or Excel monkey, but doesn't mean you actually get business. I come from investment banking, so I always tell people it's a skill set that you learn starting from something that you're good at, and then you learn because you need to learn. If you are only you come in, I'm only a tech guy, I only know how to code, and you don't think about, if I code something, does it impact consumer? Does the consumer like it? How do I market it? How do I, solve customer support? You only have one piece of the pie. So, going into fintech, again, you could be a marketing person, go in and apply for a marketing job at a fintech company, because a fintech company will need a marketing, and then it's up to yourself. Yeah. Go learn. How do I interact? Product, this product manager role is quite an interesting role that actually has come up in the last few years in this business, because it's kind of like the product guy needs to be the blend between having some technical know-how, some some engineering kind of programming know-how, some finance know-how, know the marketing, because they need to come out with the go-to-market plan and all that. So you probably start at some point, and then maybe at some point in time, as you learn the different skill sets, you kind of pivot into the center.
Yeah. And then I add on to this as well, right? So if we look at Faith as a company, the kind of the roles that we have, we've got marketing, we've got CRM, we've got social media, we've got data scientists, right? We've got engineers, we've got product, absolutely good point. We've got sales, right? We've got maybe legal as well. So it really doesn't quite matter. So a bank also would need all these roles, right? So I think it's just if you're in any of these, if you're a data scientist, that's all you gain credibility. You don't need to be a data scientist to be in a bank, like data scientists as a bank in order to gain credibility, right? And I think importantly is to answer this question is to develop your own passion, right? So if you're really good in it, you want to, you can actually be doing, maybe podcasts, you can do your own video streaming if you really like those stuff in it. Or if you're into data, you can actually start doing data analysis for banking, and that will help you gain some so-called entrance into a bank, in that regard, right? Or into finance, investing, you can do your own, investments on the side, etc., etc. I think there's a lot of ways that you actually can build expertise around it, right? But yeah, and multiple faceted roles, I think, in finance, in fintech, and or traditional. Yeah,
I think it's a good point. I think, when you talk about fintech company, it doesn't mean you need finance. I mean, it's like every other business, you need all the different kind of skill sets. And if you really want to get in, you got to ask yourself, what skills do you have? What do you bring to the table? I think we ran out of time, but I think we had a really good conversation. Liming, thank you for your time sharing what Razer is doing in the fintech space.
Thank you.
And AP, yes, AP. Thank you also for sharing what FaithPay is doing as well. I guess we come to the end of this discussion, but I will give my time back to Josh. Thank you.